Hey, folks. Thanks for tuning in to our MMG weekly recap. So, to wrap it up on a Friday, what a crazy day. I mean, the big news probably of the week was this Wall Street Journal article that came out. And essentially, the reason why it's important is the Wall Street Journal, looking back over the last, couple decades, they've always leaked stuff out about the Fed, kind of almost like a mouthpiece for the Fed. And they suggested that the Fed, yes, is going to raise rates by 75 basis points, but they're debating internally about how to tell the markets that they're going to do less going forward. Right? They don't want to give the markets the idea that they're gone and there's rate cuts coming, but they're going to start doing less. And so what that means is the markets, financial markets are forward looking. You can see over my head here, the stock market actually loved it. And even the bond market loved it. 2-year note declined by 14 basis points a day. It's a big move. And mortgage-backed securities had a 100 basis point reversal from the low. So now, as we look into next week, we have, the Fed has been jawboning, which has been a tool of the Fed, right, to kind of talk up rates. Well, next week they're quiet. It's a quiet period, thankfully. So we'll get 1 week where there's no Fed, but then obviously the following week is we're going to get that 75 basis point rate hike, and a lot will be determined as to the next move in the market may come from that communique. What do they say about rates going forward? That will be a big deal. And in between all that, next week we have GDP, right, third quarter, as well as the Fed's favorite gauge of inflation, the core personal consumption expenditure index, the PCE. That's a big number. So we have a lot to track. I hope this finds you well. Have a terrific weekend. Be safe, and we'll talk to you soon. Bye for now.